Good morning, everybody, and welcome to the Styler Wealth Management video blog. It is Monday morning, November 2nd. I hope everybody had a great holiday weekend. Let's talk about what the markets did last week, which was pretty much nothing. They did tread water. We had earnings reports. We had the Fed, and the market had to digest what was going on. Had a big day in there, followed by a little bit of a down day on Friday. So really, we are starting this week just slightly higher where we started last week. However, the good news is October was a pretty good month. And if you look at my past video blogs, just go back. They're on record there. You look back at what I talked about August, September, markets were rough. And I said, look, markets bottom in October. We bottomed, folks, okay? We bottomed. And it's not that I'm such a genius, is that this is what happens. And if you listen too much to the guys on TV, they will scare you out of the market sometimes. And you're going to miss out on some opportunity. So what I want to talk about are some questions. We had a lot of people say, because I use terms like, a growth investor or a growth stock or an income producer. Yes, pretty much when people invest in the market, you are looking for either growth or you're looking for income or a combination thereof. If you're in the accumulation phase of your life, you're trying to build wealth so that you can eventually retire, because Social Security is not going to do it. If it's there, folks, if it's there for people my age or younger, you're going to have to supplement. In fact, Social Security was developed to be just part of your retirement income. It was not developed to be your entire source of retirement income. However, unfortunately, a big part of Americans that draw Social Security, it is 100% of their income, and that's a serious problem. And then they basically, it takes one health catastrophe and they're in really big trouble. So we're going to try and help you prevent those issues by talking about accumulation, and that's where you take those assets, you let them grow for you, and you try to build that nest egg to eventually that growth goes from when you're accumulating, then you're getting close, you go turn now to growth and income. It's down that risk pyramid, okay? Up at the top is growth, and the middle is growth and income, at the bottom is income. So again, your goal is to achieve that progression from growth all the way down to income. And at the end, when you're about ready to retire, you know that, hey, I've accumulated $1 million. I know that I can draw $40,000 a year off that, plus my Social Security, plus this little pension I have, and I should be okay. And that's really the way it has to work, okay? And we do those figures for you. We have financial plans we put together for clients. That's something as a service we do for clients. I don't charge for financial plans, so I don't really do them unless you are a client. So we could talk about that another time. So growth stocks like Google, stocks like GoPro, stocks like the biotechs and many of the healthcare stocks, those are growth oriented. They're taking all their assets and really trying to build shareholder value. Then the next level are growth with income. And you really got to consider stocks like Johnson & Johnson, Pfizer. Those are still growing companies, but they also have a nice little 2 to 3% dividend, sometimes a little bit more in their stock. So what that means is you buy Johnson & Johnson at 100, but they're going to pay you 3% on your money, which is better than any money market would. So 3% on your money, you get that income quarterly, plus you got growth of the stock. So that's a growth and income type play. And then income is strictly, that's what it is. We don't really look for a lot of fluctuation, very low volatility, but it's going to send you a stream of income, and that's really what you need when you're retiring. You want low volatility and you want income. Now, what's interesting is most of my clients are pre-retirement and retirement age. So we are still in the accumulation phase, but then we are in the process of converting it over to income. And there are some great opportunities out there for growth and income investors. And I like growth and income mode, and maybe because I'm getting a little older in life too, but growth and income mode is great. And that's also called total return. Total return is what you can gain on the investment itself and the additional income that this investment could potentially derive. Like the Johnson & Johnson I mentioned, talked about. Non-traded real estate investment trusts, a great place for total return, because you get that income, and I own many of them for clients, and I love the healthcare ones. You can get 6.6%, yet you have upside. And I got to tell you, there's some that I invest in that have healthcare properties, meaning either surgical centers, diagnostic labs. They have assisted living facilities with memory care units. These are tremendous investments in this day and age. I mean, you've all heard the stats that there are 10,000 people each day turning 65 years old. You've heard the stats that there are 4,000 people each day turning 85 years old. There are waiting lists for assisted living facilities. So we're trying to monetize that and take advantage of it for our clients. So something like that, where you get 6.6% on your money while you wait, and the upside on the properties themselves, that's part of the whole portfolio process as well. So again, I hope I answered some questions. People want to know, hey, what's growth? What's income? What's growth and income? Also, growth and income could be termed as balanced. It's a balanced account. But for the most part, folks, in our portfolio management, what I do for my clients, we're mostly balanced. I don't have one client that's 100% in stocks. I don't think it's appropriate for most people because everybody is happy with the stock market as long as it goes up. But as soon as it goes down 20%, people aren't so happy. So you really have to kind of find that balance, and that's what we try to do. All right. I really appreciate everybody joining me this morning. I'm going to have more videos later this week, and I do have a YouTube channel. You can search YouTube for Lee Seiler. However, tomorrow, Facebook will be reporting numbers, so on Wednesday, I'll give you guys a report on that. Facebook has to deliver. By the way, ticker symbol on Facebook is FB, as in Facebook. They really have to deliver. The stock has done extremely well and closed about 102 on Friday, and that's up from about 80 not that long ago. And I know this because I did pick some stock up for clients in that $80 range when the market dropped 1,000 points one day. I said, you know what, I'm going to go ahead and take a chunk of that stock because I felt it was value at that point. So I'll report some more news on Facebook what happens. We'll see what happens, hopefully. Again, but this is a stock that has made a tremendous run. We're talking 20-something points in a month, month and a half. So they now have to prove that that move is warranted. So they have to knock the cover off the ball. Anything less than a beat of estimates on earnings and sales and new members could clip the stock. So we'll see what happens. In the meantime, share my videos. I promise. I'm getting some more cruises, and I'll be able to distribute those. I've had some friends go the last couple weekends. They had a great time. So this is Lee Seiler. Feel free if you have any questions, more questions like the growth and income stuff, you can message me, call our office. We are doing 401k reviews. So if you want us to do your 401k and kind of help you reallocate it at no charge, just be patient with us. We'll get to you. As always, have a great day. I'm Lee Seiler. We'll see you Wednesday.